Hi, everyone, and thanks for joining us today. My name is Jake Irwin, and I'm part of the marketing team here at Benefits by Design. We're excited to introduce our newest product to you, ASOnly, a budgeted administrative services only solution, also known as ASO. I just want to give a couple notes here before we get started. So first off, this webinar is being recorded. You'll receive a follow-up email with a link to the recording after the webinar. If you have any questions or concerns about this webinar, please contact us at socialmedia@bbd.ca. Stick around after the main presentation here as we're going to be running a question and answer session. There's no such thing as a silly question, so please ask away. And if you do have a question, please type it into the GoToWebinar question interface and we'll do our best to address it at the end of the webinar. I'm pleased to be joined today by Danielle Lalonde, a BBD product lead of our new ASOnly product, who's going to take it over from here. So welcome to Danielle.
Thank you, Jacob. Thanks for everyone for joining in today. My name is Danielle Lalonde, and I've been with BBD for about 9 years now. I've been very fortunate to get to work in many of the varying departments here at BBD. I started in new business as a quoting specialist and then moved over as an implementation specialist. I was in new business for about 5 years before moving over to the client services department as an acting client manager. Most recently, I joined our underwriting team as an underwriter and have been there over the last year. I am now moving over to product lead for our newest product, ASOnly. And on a personal note, I love taking on new hobbies and I love dogs. I have 3 dogs, all named after superheroes, Gambit, Thor, and Gamora. Gamora is in the picture. I appreciate your valuable time, so let's get started. So first, let's consider what an administrative services only plan is. Many of you are going to be familiar with ASOnly, ASO. However, for those not familiar, the administrative services only model is a self-insured option for employers. Risk is partially shifted from the insurer and is assumed by the employer, which allows for potential savings and charges from the insurer. There are 2 types of arrangements in ASO options. One is non-budgeted and the other being budgeted. Many employers find this attractive if they have the cash flow to support large claims or want more control over the costs they're paying for their employee benefits. ASO plans aren't new to BBD. We have many groups with non-budgeted ASO arrangements, which we currently offer with Green Shield and are continuing to offer. ASO is a growing area of interest to employers, and we want to ensure that we have options to suit your clients' needs. So we've expanded our products to offer a budgeted ASO benefit. I'm excited to let you know that this budgeted ASO arrangement will be offered in partnership with ClaimSecure. Budgeted ASO is geared to provide the same feel as a traditional insured plan while offering some unique features and advantages, which we're going to discuss here today. It allows for an alternate solution for health and dental plans while still offering you and your clients the accessibility to many benefits we offer with our varying partners. So what are the benefits of this product? For you as the advisor, it provides out-of-the-box solutions for unique administration and/or unique plan design requests. One of the examples I can provide is that for a plan design feature, the ability to offer health and dental with no termination age. Our hope is that ASOnly offers you an attractive option for your many clients who are looking for non-conventional benefits and flexibility in what they can provide. For your client, the employers there are many advantages to budgeted ASOnly. Similar to other administrative services offerings, they're paying for the coverage of claims, minimal expenses for administering and adjudicating the plan, as well as applicable taxes. The employer could potentially save money by going with this option, as there is a reduction in some of the extra costs that are included in standard benefit rates. They also could possibly receive funds back that were not required to cover their claims, which we'll touch more on later. They also have added flexibility. Every carrier has their own unique adjudication process they follow. With ClaimSecure not being considered an insurer but an adjudicator, this allows for ease of adjustments of benefits under ASOnly. Ultimately, it's up to the employer to get to decide what to cover for their employees. Of course, there are still limitations as they have to meet industry and CRA guidelines. We're going to touch more on the advantages to your clients as we go. Benefits by Design is here to support the plan sponsor or administrator in all the ways we currently service groups. Clients will continue to have their own support team in place with access to Nomad, which is BBD's online tool to handle the day-to-day employee changes and handle the administrative needs of their employer. Their support team is here at BBD to assist with any of their questions and provide technical help. For employees, they won't know the difference in the choice of funding model that's selected by the employer. Whether their employer went with traditionally insured model of benefits or a budgeted ASO model, the employees will have access to the same great services and great customer experience. With ASOnly, employees will still receive a Pay Direct card, which can be used at providers directly if this service is available, and pharmacies. Also, they'll be able to set up a personal account with ClaimSecure eProfile online, where they can submit their claims directly electronically or get forms to submit via paper claim. They'll also have great customer support system in place through ClaimSecure's Customer Service Center to help with questions about their coverage or any pending claims. This benefit can be a great option for many employers. In considering the ideal client, they would likely have 34 or more employees, have stable claims history, have the cash flow to support the claims of their employees, and be comfortable with the additional risk they're taking on financially. Ideally, they would like flexibility in what they can offer their employees. If an employer likes to be actively involved in decisions of the benefit plan, this may be a great fit for them. So let's consider some key information about ASOnly specifically, about the options and requirements. As mentioned, it's ideal for a client who's 35 or more lives, but we are willing to consider other group sizes, so don't hesitate to ask. In order to be eligible for ASOnly, the client must have current coverage with available claims history, and we do recommend that this is a minimum of a year. With ASOnly, there is also stop loss coverage in place. This stop loss is set at a standard threshold level of $10,000, and the insurer is Canada Life, offered through ClaimSecure. We also have a few different travel options, 30-day, 60-day, or 90-day, and again, the insurer is Canada Life through ClaimSecure. With ASOnly, pre-authorized checking is mandatory, so the proper paperwork for automatic withdrawal is required at the time of sale with initial setup for the group. ASOnly also requires a deposit, a 6-week deposit of anticipated claims and applicable admin fees and taxes, which is collected by BBD at time of sale and will be secured by ClaimSecure. More information to consider is the fees and processes in place. Administration fees are 9%, which exclude advisor's commissions. The advisor's commissions can be set at any requested level from the advisor and are payable on a monthly basis for ASOnly. Reconciliation takes place after the first 12 months of coverage from the effective date and is based on the experience period. The renewal then takes place 16 months from the effective date of coverage. This is to line up with the other benefits renewal states. Packages are sent out 60 days prior to the effective date, so you can share with your client the information well in advance of any changes. With budgeted ASOnly, there are many things that are the same as a traditional benefit model. For one thing, the client is billed monthly premiums, which are estimated rates for single and family that are calculated to cover the claims. It's kept simple and is easy to monitor for the employer and their financial team. Employees have the same access to their benefits and client experience. As we mentioned, the funding models aren't apparent to the employees. And clients have the same access to BBD services. online enrollment at time of sale, a dedicated client services team, Nomad, BBD's online portal for administrative use, and marketing materials to provide to their employees. But let's consider what's different from a traditionally insured plan. Unlike fully insured benefit plans, ASOnly estimates the expected funds that are required to cover claims, as well as associated costs, such as the admin fees, your commissions, stop-loss charges, travel costs, and taxes. At the end of the year, there are 3 possible outcomes at time of reconciliation. First, there's the possibility that claims were greater than estimated premiums collected. At the time of reconciliation, claims will be reviewed, and if they're greater than what was collected to cover all costs, additional funds will need to be paid. This, of course, will minus any claims that were into the stop loss. Employers will receive clear information regarding the deficit and what is owed, in addition to what was already paid by them, and will be billed as a lump sum on the next invoice after reconciliation. The second possibility are that claims are less than the estimated premiums collected. If the claims paid, plus appropriate applicable charges, end up costing less than what was needed based on the premiums collected, excess funds will be reimbursed back to the client, not retained by the supplier or insurer. This can be supplied back to the employer by either a full lump sum payment direct to the employer or applied as a credit on their account to cover future billed premiums for the new experience period. Thirdly, if everything equals out, no additional action will be needed at time of reconciliation. So let's review the pros and cons of ASOnly. In the pros column, we have flexibility. ASOnly has flexibility in the plan designs and way of administering plans. Secondly, it has potential savings for employers. There's a reduction in the cost from insurer, and also if claims reduce, for example, due to a high claiming employee leaving the plan, estimated costs could reduce and a refund is possible as they are under the estimated claims. Budgeted ASOnly is also a great way for employers to be introduced to the ASO model. It has the same feel as a traditional plan, so it's a great way to get their feet wet and keep stable costs month to month and have some predictability versus strictly paying for claims as they happen. Costs in an ASO arrangement are very transparent. The client can easily know what they're paying for and the associated fees. And there's also no need to negotiate renewal rates. The costs are set based strictly on the estimated amounts to cover claims and necessary fees. Other charges are already stripped out. There is a couple of cons to also consider, however, for employers. Since the employer has agreed to pay for claims owed, they cannot walk away from any deficits, if there are any. They are responsible to reconcile what is owed to the insurer for covering claims. In order to avoid any surprises and unexpected additional expenses, they'll need to be active in monitoring the claims being paid on their behalf in comparison to what has been paid in premiums to cover the claims. Benefits by Design will be here, however, to help you and your client with monitoring the funds required, as well as accessing the information you need. Secondly, as a con, we need to consider the additional risk that the employer takes on. While there is stop-loss protection, claims could unexpectedly spike for an individual, and this could impact the funds that they had budgeted for their ASOnly plan. A great way to alleviate some of the extra risk is by putting additional maximums in place within the plan to help keep overall costs down and controlled for the client. Let's visually compare costs in this example. In this example, they have the same plan design. We have Benepac's BBD's traditional insured benefits in comparison with BBD's ASOnly budgeted plan. We can see that the premiums are slightly less for ASOnly. Claims costs are basically equal to each other, and admin costs are less for ASOnly. The reasons for this are illustrated further by comparing the risk for both the employer and insurer. As the risk for the employer increases with an ASO-only budgeted plan, the risk for the insurer decreases. Since charges incurred by the insurer will be less, it in turn allows for the potential savings for the client as the insurer will reduce costs. But what are the specific charges that appear in a standard benefits plan versus the ASO funding model? To keep things simple, let's call this example Canada Inc. This group came in just on target. They can expect a minimal increase next year considering trend and regular inflation in the economy. On the left-hand side, we have the Benepac plan, and on the right-hand side, we have the budgeted ASOnly. Both claims started off at $31,524. In the Benepac plan, we can see that the claims were bumped up with reserves, which is the incurred but not reported claims. They also have trend in inflation, which is the increase in the economy, plus it is accounting for a 4-month lag for non-reported claims. They also, on the budgeted side, we can see that the claims have been bumped up by trend. And this is the increase in the economy for the 12-month period. We can also see that the admin fees and the associated stop-loss travel costs and premium taxes are less for the budgeted ASOnly plan. They have a potential annual savings of about $7,000 with ASOnly, and groups under target could see further savings. To help with ensuring the claims for Canada Inc. stay on target for the projected costs, let's take a look at the stop-loss protection offered within ASOnly budgeted ASO. The stop-loss arrangement for ASOnly works similar to any stop-loss arrangement. It's put in place to have added protection to meet clients' needs. As employers are taking on additional risk with this benefit offering, stop-loss is a critical piece to ensure that the risk is manageable for the employer. Given this, all EHC plans for ASOnly budgeted ASO will have stop-loss, the standard threshold being $10,000. The stop-loss charges are based on the drug maximum and the employee's province of residence, whether it is a pharmacare or a non-pharmacare province. A prorated charge is then calculated based on these demographics. The cost for ASOnly stop-loss ranges from about 4.77% to 14.89% for the ASOnly budgeted ASO. Let's consider an example of an employee. We'll call this employee X. They had paid claims out in the amount of $16,250. Since there is stop-loss protection in place, the employer is responsible for covering $10,000 of the claims, and the insurer will cover the remainder of the claims at $6,250. Over time, this can add up to a lot of savings for the employer in not having to cover the full costs. But what about your clients that have existing claims into the stop-loss? If your client has claims into stop-loss already, this may not be the ideal fit, as the employer would be responsible for taking on the costs that are expected to be ongoing in the claims they pay. On the right-hand side, in this example, we can see that employee Z is on a specialty drug, Remicade, in the amount of $24,250. With their current carrier, the employer was responsible for claims in the experience of $10,000, the remaining $14,250 being removed from the experience. If they wish to move over to ASOnly through ClaimSecure, the insurer will not take on this known risk. For this individual alone, the new stop-loss level will become $24,250, and then any new claim beyond this amount for a different specialty drug for employee Z will go into stop-loss. If there are stop-loss claims existing for the group, it's important to provide the information so the full implications of cost impact for the group can be assessed. There are some possible options, such as implementing a formulary that can help removing high-cost claims, and we'll touch more on this later. On the example on the left-hand side, if the group comes into force and had no prior stop-loss claims, normal stop-loss procedures would apply. If employee Z has a claim after the effective date and nothing before the effective date, the specialty drug claim in the amount of $30,500 would go into the stop loss as stop loss protection would fully kick in. The employer then pays for $10,000 and the insurer becomes responsible for the costs of $20,500, even if ongoing. With the travel coverage, rates are based on tables for under 70 and over 70 and are calculated into the budgeted rates for ASOnly. The travel benefit is designed to be quick and convenient. There's no medical questionnaire and they are simply enrolled when added onto the benefits plan. There's choices of coverage options to meet the employer's needs, such as 30-day, 60-day, and 90-day options. There's no maximum on overall benefit per incident or lifetime, only the limitations on specific benefits within the travel benefit, such as accidental dental, for example. There is no deductible on all coverage options. Your client's employees will be taken care of from the first dollar and have 24/7 emergency assistance from a multilingual team. They're also going to have support on the call and selecting a medical facility that can coordinate direct payment, enabling claimants to focus on the health issues at hand and not the associated bills with the unexpected medical emergency. Formulary is an optional benefit and is not included in ASOnly unless specifically requested. By adding the formulary coverage, clients' stop-loss rates will decrease by about 35%, and they are adding on additional protection for the plan and minimizing the potential of stop-loss claims. Adding on the formula option provides coverage for all commonly prescribed drugs while excluding all specialty drugs to ensure sustainability of the plan. Under the ClaimSecure specialty drug, it's defined as any drug that costs more than $10,000 per year. It also offers two significant benefits to the plan members. First, a coverage navigation service. This is a mandatory benefit within formulary and has a $195 fee associated with it. The second being ClaimSecure special authorization process. Let's consider the example of employee X again. If the employer implements formulary on the plan, the coverage for Remicade will no longer be covered for reimbursement under the benefits plan, which helps with the cost for the employer. The employee, however, will no longer have coverage. The employee will need to go through the process of getting assistance through the coverage navigation service, where they'll be supplied help for getting coverage under provincial or manufacturer-sponsored programs. If the drug is not on a provincial formulary and the other therapeutic equivalent drugs do not work, they can then work to apply for the drug under ClaimSecure's special authorization program. It's important to note that these changes change the way claims are adjudicated for the client's employees, so they need to have clear expectations on how this will impact their group. The client can also choose to add on a preferred provider network coverage, which is also optional and not automatically included. By adding this preferred provider network, the client's ASOnly administration fee will be reduced by about 2%. The Rexall Preferred Provider Network is a program that requires all plan members to fill their medications prescribed at Rexall, PharmaPlus, or MediTrust pharmacies across Canada. The exception being if they are more than 15 kilometers away from a pharmacy in the network. Plan sponsors receive a reduction in adjudication fees for all benefit lines for health and dental, and plan members get to enjoy discounts on more than 2,000 Rexall branded everyday items, such as vitamins or over-the-counter medications. Again, employers need to be clear of the impact of the claims adjudication for their employees with this arrangement. If you like what you've heard today and have clients you would like to propose this option to, please reach out to our quoting department at quotes@bbd.ca. Be sure to send along the general information about the client, the claims experience, a minimum of 1 year, complete current employee census, the current rates, renewal rates if available, and plan design. At time of sale, we will require the booklet as we will require it for plan mapping. If you have additional questions, also reach out to your regional director. They're here to help at any time. If your client's ready to make the choice to set up benefits with ASOnly, reach out to our sales department for the necessary paperwork at sales@bbd.ca. Once they're all set to submit the required sales paperwork, they can provide the information and completed paperwork back to the same email address. The client experience is then ready to begin. With ASOnly, you and your client will also have the same great welcome, as all BBD groups can expect. You, as the advisor, will receive a welcome email with policy information, renewal information, and commission information. The plan sponsor will receive a welcome email with Nomad access, plan summary and booklet information, policy information, subscriber IDs, and general additional information. For employees, the physical packages will include identification numbers and pay direct cards, info and setting up an e-profile online, and a benefits summary. You will also have continued support in place. There are check-ins at 3 months, 6 months, and 9 months. We're here to help. In the first year of coverage, you can expect that your client services team will be very hands-on in providing you updates on the group's claiming information. At 3 months, you'll get a personalized check-in. At 6 months, there will be a review of the claims experience. If it would appear that there will be a full deficit, suggestions will be made to potential changes to the plan or adjust the budgeted rates to make reconciliation easier. BBD does reserve the right to make adjustments if the deficit goes over 15% of the required funds. However, this will always be a discussion with you prior to any changes being made for your clients. And at 9 months, you can expect to be guided through the renewal process. You or your client can reach out whenever you need to Benefits by Design for your administration needs at any of our offices. For the employees, they can contact ClaimSecure directly at any point for claims adjudication and plan coverage questions, either through the call center number or the email address provided. There are many additional resources for you. We have an advisor guide with the key information about ASOnly. This webinar has also been recorded, and you can request a copy of the slides or the recording. There is also the Advisor Buzz, which has ongoing articles that you can sign up for, or BBD's blog. We also have a quiz that you could give your client for them to see if ASO is a fit. You can follow BBD on social media at any time. Thank you for joining in today. And so now we're going to open it up to questions, and I'm going to give the mic back to Jake.
Hello, yes, thanks very much, Danielle. So there's lots of great information there, and we do have quite a few questions here. But before we jump into the Q&A portion of the webinar, I just want to remind everyone that the webinar is being recorded and that the webinar will be sent to you in our follow-up email after the webinar is concluded. So as we go through Q&A, feel free to keep submitting your questions through the GoToWebinar question interface. We do have a few to get through, but there's always room for more. So Danielle, question number 1 is about stop loss. So the question is, $10,000 stop loss, is that per person or per family? Danielle, you'd have to unmute yourself, I think.
Sorry about that.
Go. No problem.
So it is per individual, not per family.
Okay, good. Question number 2 is the comp the same for both scenarios? So I think this question came in when we were doing the Benepac and ASOnly comparable side by side. So I believe that's in regards to the compensation.
Yes, so that example does have the same administration fees. However, there are some items that are stripped out of the associated fees with the Benepac option. So that's why you'll see a slightly different overall cost.
Okay. Perfect. So Next question, can the travel stay in place at any age?
So yes, the rate tables are for under 70 and over 70. So individuals on the plan, whatever the age is for over 70, they would also be still on the plan with that particular rate table. And then they would just need to meet the requirements under the plan. And it will be laid out in the booklet as to the stability clause included in the travel.
Awesome. Next question is also about travel. So travel rates suggest a 10% advisor compensation, but the suggested compensation for budgeted rates is 4%. Do advisors receive a separate commission for each, even if travel rates are worked into budgeted rates?
Yes, so you would still receive the 10% for the travel rates, regardless of the overall being 4%.
Awesome. What are the stop loss charges? Are ASO statements of surplus/deficit available every month?
So the stop loss charges range from just under 5% to about just under 15%. So the advisor guide that you can request has the actual layout of all the stop loss charges. So make sure you request a copy and you can see all the varying charges. And sorry, what was the second part of the question?
Are ASO statements of surplus or deficit available every month?
So we are going to be provided information from ClaimSecure as to the ongoing amounts of claims and can compare it to the amounts that are coming in. So you could request that information. It won't be readily available on any of our platforms just yet. However, you can request that information and we can provide that. Your client services team can provide that for you.
Okay. This advisor is wondering where they can get a copy of the advisor guide, which I can actually answer. Your BBD regional director will be able to provide that to you. So we'll have them follow up with you and send that to you. And then next question is, can a client go insured on the extended healthcare and ASO on dental?
Yes, so they can do either budgeted ASO for health or dental, and then do the opposite and have a traditionally insured for either the health portion or dental. So they do not have to have both health and dental with the same type of insured plan.
Awesome. The advisor says thank you. And next question. This looks like it's in regards to the question from earlier. So I think it's just adding clarity. So this was the question about the comp from earlier, Danielle. So how much was the comp on the traditional versus how much was the comp on the ASO? Is the specific question.
So I believe they were both set at 13%. I'd have to do a double take and look at the example specifically. So I can get back to them on that specific example after.
Okay, sure. Perfect. They say thank you. And we have a few more questions actually. So the travel cost for 60 days is showing the same cost on the single as 30 days in the presentation. Should this state $2.51 versus $2.21 on the 60 days?
I will have to check that. It might have just been an error, but
Okay.
the travel claims are laid out also in the advisor guide, so you can take a look at them there, and they are based on the rates for each of the tables.
Okay, perfect. So another question, we're almost there though. Could we use, say, a 4.5 or 5% flat commission across the board rather than different commissions on health and dental and travel?
So the travel is set rate, so they would be a standard 10% commission. They're the rates that we have factored with ClaimSecure directly. However, you can have varying you can have varying commission charges on the other portions of benefits, so you don't have to have the same across the board. You can have different for, say, like a pooled benefit like life, and a different amount for health, and a different amount for dental.
Okay. Is the travel insurance 60 days per trip or 60 days per year?
That is a good question. I believe it is per trip, but I will verify that and get back to you on that.
Okay, sure. Another advisor says likely per trip. Melanie Elliott, one of our regional directors, says yes, it's per trip. There you go.
Perfect.
So with that, it looks like there's that's the end of our questions. So I'll just kind of wrap it up here. So big thank you to you, Danielle, our product lead for our new ASOnly product, for going through the presentation and answering all those questions. If any advisors on the call do have any other questions, or would like to discuss the merits of an ASO solution, we encourage you to reach out to your BBD regional director. We will be following up with you regarding a recording of the webinar as well as any other materials. So thank you very much for joining us here today, and please enjoy the rest of your day. Thanks very much.